Hi there, and you've tuned into ET now. This is Your Trades with me, Cheryl D'Souza. Along with me, I have Avan Dubash. And Avan, what a week gone by. No doubt the benchmarks have shut shop pretty much flat, but it was a resilient trading session for the entire week.
Yeah, given all that we've been handed over, we're in the thick of the earnings season. You had the RBI policy as well that took place, the Fed notes, and all of that. And, it's been fairly tempered after all the give and take. We've done absolutely nothing for the week gone by. You did have the MPC, which hiked the repo rate by 25 basis points to 6.5%. You had the AMFI data coming in, where the SIP data was at an all time high, the SIPs were at an all time high. A lot of those new age tech stocks as well were in the spotlight, and they've seen a smart recovery for the most part, largely on the back of volatility, on the back of profitability, pardon me. And yes, of course, for the Adani group of stocks, volatility, although we have seen a recovery in the likes of Adani Ports, Adani Enterprises, and some of the other names. Next week, of course, our eyes are rained on a whole host of numbers. Nestle, Aisha, ONGC, Apollo, etc. all will be coming out with quarterly performance. But let's connect with Rajesh Palviya as well as Siddhi Bandyopadhyay joining in on the technicals and the fundamentals respectively. Good to have you both on board, gentlemen. And Rajesh, get in your take on the index. It's been lackluster as ever. What do you make of this? Will we remain confined to a tight range? And do you think that, around the 17,850 mark is where we'll largely be circling around?
Yeah, good afternoon. Yeah, both the indices like Nifty, Bank Nifty, both were trading in very tight range throughout the week. Almost both the index has formed a Tuesday candlestick formation on the weekly chart, which is a sign of indecisiveness for the both the indices. If we analyze the Nifty setup, almost we are near to immediate resistance area of 17,850, 17,900, which is the major call concentration area for the Nifty. If at all Nifty manages to cross above 17,900 level, then possibly some short covering action we can see in the market, and then Nifty can inch up further higher towards 18,000, 18,100, which is again next supply area for the Nifty. So looking at the overall setup, looking at the sectoral indices which are giving some bit of support to the index, are poised to give breakout. So we are positive at this moment, and we are hoping that if we continues to hold above 17,750, 17,800 zone in the next week, then possibly Nifty may attempt to give breakout on the higher side, and possibly in the second half of this Feb series we can expect a move towards 18,000 and beyond that level also. So we are bullish for Nifty, and we are expecting that one can keep buying stop loss at around 17,750 to go long for upside target of 18,000 to 18,100. If we analyze the Bank Nifty setup, it's a sixth attempt. Bank Nifty failed to cross 41,700, 750 zone. But the kind of recovery which we have seen from the recent low is giving us some sign that if Bank Nifty able to sustain above 41,300 level, then possibly Bank Nifty may attempt to give breakout on the higher side. Above 41,750, we are projecting target of 42,000 to 42,300. So we are hoping that in the next week we could see a breakout on the higher side, and Nifty and Bank Nifty can scale up further.
Absolutely. Right. So positive outlook coming in for the benchmark indices as well as for Nifty Bank from Rajesh, believing the fact that if Nifty holds on to 18,000 or 17,800 odd levels, then we are likely to see a breakout in the benchmark. Sudeep, welcome on board. And let me get your views on what is happening with markets, because the news flow is galore when it comes to the markets. You have a lot of news points to take a look at, but where do you see the markets headed from here on? One of the satisfying or one of the positive news data point that we got is the fact that in the month of January you had record SIP inflow numbers. So going by that, do you expect the markets to hold on?
Well, obviously the market is holding on. We had a slew of bad news as well, whether it's the Adani thing, whether it's the global FIIs turning a bit risk averse, and also the fact that a lot of money is moving out of India and into other Asian markets, including China. Even in this backdrop, I think we have seen markets by and large holding, and at every lower level we have seen buying coming back. That's the reason why the back of the market hasn't been broken in spite of a lot of provocations, I would say. Of course, the domestic flows, including the SIPs, help in that matter. But having said that, I think the way market is poised, we believe that most of the triggers which we were waiting for, whether it's RBI policy, US Fed announcements, the budget, even corporate results are out of the way by and large. I mean, there are a few results still pending for the next week, but that's about it. And all the major results have by and large come. So I think market will remain kind of range bound. Will wait for a trigger. Will act on specific news flows. We don't see any major trigger in the near future, and I expect the market to remain range bound with definitely a positive bias on the back of positive expectation as far as Indian economy is concerned.
About new age tech, and I can't help but ask, largely owing to the fact that we've seen a lot of these companies, change the tonality, largely, playing as per what the market had wanted to hear, at least when it comes to profitability, turning break even, really focusing on their earnings metrics. Barring Zomato, maybe that came in as a disappointment. Pretty much all of the other companies, Sudeep, have really pulled up their socks. So, has your perception changed, or will it change? What's the outlook?
You're absolutely right. They have understood the demands of the public market and they have started, acting accordingly. Obviously, the path to profitability and the multiples, P multiple and things like that, which predominantly is driven by profit, is what the public markets want, and they are now cognizant of that and trying to work towards that. But having said that, I think there's still a long journey. While Paytm has improved at an EBITDA level, EBITDA positive, I think it's a long journey. The business model is still settling. As I can't say it has already settled. While the loans is giving them maximum income, it's a pretty much a distribution piece. And remember, distribution income doesn't give a stability or a valuation in the long run. So one has to see what are the other levers of valuation. It did recover a bit, and of course there was some block sale and there was a bit of a dip. But I'm not sure whether investors should rush to buy Paytm. I would say the same about Zomato, Nika, and some of the other new age companies. We have seen improvement, but I won't recommend buying yet. It's better to wait and watch even now.
The new age tech space is what Sudeep has to say. Not the right time to go ahead and buy, despite some of them showing some sort of an improvement. But coming to you, Rajesh, what's your take coming in on the IT index? If you look at the weekly performance, fifth straight week coming of gains coming in for the IT sector, looking attractive right now.
So after a recovery from the lows level, IT index is consolidating at higher level. It's a fourth, fifth week we are seeing. IT index is showing some bit of buying interest. Even if we go with the large cap IT stocks as well as mid cap IT stocks, some buying traction is still there in the stocks, and we believe that this IT index can continue these kind of buying interest going forward also, and we expect some more recovery trade is likely to continue in the IT space. So from that space, we like Infosys. From mid cap IT space, we like LTTS and Emphasis. These all stocks are looking positive on the near term setup. So we continue to remain bullish on Infosys, LTTS, and Emphasis for further more upside from the current level. We can expect 3 to 4% upside momentum in the near term from all this space.
Okay, stay with us, gentlemen. Lots more to talk about. We take a very quick break. Be right back. Back with your trades right here on ET Now. We're in conversation with Sudeep Bandyopadhyay, who's joining in on the fundamentals, and on the technicals we have Rajesh Palviya. Sudeep, wanted to get in your thoughts on earnings, because next week as well is going to be pretty hectic. There's Adani Enterprises, Nestle, Apollo Hospitals, Eicher Motors among the large caps and among the names that will be coming out with earnings. In particular, what are you expecting when it comes to Eicher Motors?
Well, I think Aisha should come up with a good set of numbers. We have seen the numbers and we have seen the performance of Aisha over the last few quarters, and things are definitely improving. In fact, out of the entire automobile pack, we have our favorites M&M and Aisha. We also like Ashok Leyland, but I think if I have to pick two stocks, it will be M&M and Aisha. So I will be watching Aisha. Other company I'll be watching is also Apollo Hospitals, which I think is a very interesting play on the entire pharma hospital and diagnostic space. If one needs to bet in that space, we believe Apollo after correction definitely looks good even at current levels.
Right. So that's the top picks in the auto pack, and also what Sudeep thinks about Apollo Hospitals. But Rajesh, coming to you, and I can't help but ask about PSU Bank Index. They've gone back to their winning ways. Looks like it. Second straight week of gains coming in, and you have Bank of Baroda that is leading. Also, you have the MSCI that is included this one as well in one of their indices. Where do you see Bank of Baroda in particular, as well as PSU banks headed from your own?
So in the recent past, stock has formed a low of around 145, and we have seen a strong recovery from those levels for Bank of Baroda. And now looking at the near-term setup, yes, recovery can continue further. 180, 185 is the zone where again stock may get some supply pressure. But looking at the overall long-term setup, stock is in bullish territory. There was 2 month of corrective move, but again stock is regaining strength on the near-term setup. So Bank of Baroda looks positive at the current level. Also, those who are already bought or those who want to buy, they can buy at the current price also with stop loss of 158. Upside target is 180.85. If it surpass 185 level, then possibly the next target for the stock would be around 200 plus level also. Even on the Canara Bank, yes, some recovery we have witnessed in the recent past, but still the stock is struggling to cross its immediate resistance area of 300, which is very critical for the stock. If stock manages to cross those levels, then only we can see some substantial recovery from the here onwards, and then possibly 315, 320 could be the next target. So at current juncture, yes, one can buy because recovery is there in the near term setup. So stop loss to buy Canara Bank is 280.
So those are the top picks among the PSU banking names. But what are your other picks, Rajesh, for the rest of the week for our viewers?
So one space which is clearly showing bullishness, that is capital goods, and from that space we like ABB. Very strong buying action throughout the week. Long built up is clearly there on the derivative data also. Strong breakout on the weekly chart. Looking at the overall setup, we believe that ABB can continue furthermore up move from the current level. 3300, 3350 is the target on the near term to short term basis. One can buy with stop loss of 3100. The second stock which we like is from chemical space. We have witnessed, buying interest in the chemical space. SRF is looking very attractive from that space. Looking at the overall setup for SRF, stock now managed to give breakout of its down sloping trend line on the daily chart, and now stock regained above its near term moving averages. So we are projecting target of 2350 to 400 for SRF. One can buy with stop loss of 20 to 40. And third stock is Bharat Forge. After a breakout on the long-term chart, stock is consolidating since last 3-4 months in very narrow range. And looking at the price action, especially in last hour of trade in today's session, stock has almost closed near to the day high trajectory. Looking at the overall setup, we believe that Bharat Forge can continue its upward momentum in the coming week. 930 is the target. 871 can keep stop loss.
All right, so that's the top picks coming in for Rajesh for our viewers. Apart from Bharat Forge, ABB, and SRF, he also has Bank of Baroda and Canara Bank, which he feels that look attractive. But Sudeep, coming to you, do you have any top pick for our viewers, given the fact that we face two continuous volatile weeks? So, any particular stock that one can look at?
Stock, if I had to say, I'll still go back to my favorite Larsen and Toubro. I think they have a significant tailwind behind them. With the government's focus on capital expenditure, construction infrastructure is going to get big boost, and Larsen being the leader by far in that particular space is definitely going to be the beneficiary. Performance of L&T also has been improving continuously quarter on quarter. They have also managed working capital much better by getting rid of their unrelated assets and unrelated diversification. Their subsidiaries are doing exceedingly well. So overall, we are extremely bullish on L&T at current levels.
All right, so L&T looks attractive for us, Sudeep. But on that note, thank you so much, Rajesh, as well as Sudeep, for joining us on the show, for giving us your take on the market's earnings as well as sharing your top picks with our viewers. So that is those are the top picks that one can look at, and Sudeep likes L&T. But let's talk about the coming week, and you'll have a lot of earnings coming up next week. Let me bring on board Ashesha to tell us which are the companies.